Let's turn to the broader markets. Our next guest says inflation is a bit stalled, but points to some sweeping changes to come with the new year. Joining us now is former Dallas Fed President Robert Kaplan, now a vice chairman at Goldman Sachs. It's great to have you. Welcome in person.
Good to see you in person.
So you have been warning about all the fiscal spending and how that has kept inflation higher. Where are we now?
So to me, the big news last week was on the Fed meeting, but there was a couple other news stories that I think relate to this and what you're talking about. One, in the previous week and over the weekend, it was reported that a very large bond house had publicly said they're going to reduce exposure to U.S. duration because of the fiscal situation and the path of fiscal. I think you saw a little bit of a backup in the 10-year before the Fed ever met last week. Then the Fed had its meeting, and what was a little concerning was the outlook by the Fed participants showed that the path of inflation had stalled a little bit, in fact, maybe even deteriorated a little, and it made for an awkward press conference. If that's true, why are you cutting? Exactly. And then the third thing that happened, while in and of itself it got resolved, was the debt ceiling, and that isn't that consequential. But it reminded people we've got 4 or 5 big structural changes that are going to happen next year. Some will require Congress, and maybe they're not going to be as easy. It may be more challenging than people thought. And so I think all those things together, put a little more uncertain backdrop as we head into the new year.
What does it mean for the Fed, which now there's some uncertainty about whether they cut next year and when it happens? And
I think that's good that there's uncertainty, because if I were there, I would not be willing to go any further unless I saw below 4.25, 4.5, unless I saw demonstrable improvement in inflation.
Did they make a mistake cutting last week?
Well, I think you can make arguments both ways. I think the part I said before the meeting, I would go in concerned but with an open mind. I think once I saw the dot plot, which participants didn't see till probably Monday night, and you saw the inflation forecast of my colleagues was inching up, I think that would have pushed me not to want to cut. It would have made for an easier press conference for Jay Powell. But I think in the long run, we won't be talking 2 years from now about this meeting. We're going to be talking about a whole range of other things. I think they're still in decent shape. It might have been a little easier from a risk management point of view if they had done nothing.
But you just said your mind is made up at this point. You wouldn't do anything here forward, barring a change in data?
I need to see demonstrable improvement in inflation from here. And I'm also conscious of the fact we are running deficits, you've heard me say this before, at historic levels. We just, as the current administration ends their time, they're pushing CHIPS money out the door, other money out the door. It's not surprising that inflation's a little bit sticky. And so, no, I want to see some more evidence of improvement.
When you say demonstrable, are you suggesting that you wouldn't cut until inflation gets to the 2% target?
No, I just want to see progress and evidence of progress. And by the way, we may see it as we head into next year. And I'm also hopeful if some of these big government spending programs are stood down, if DOGE has an effect and makes a dent, it might actually be helpful in terms of the inflation outlook, even though there's some other things that could go the other way.